Well, good afternoon, Maverick traders. It's July 16th. Joe with you here on a Tuesday, and it has been a crazy, fun market. We'll talk about it here. I've got my 2 cents. You guys know how this works. Take responsibility for the outcome. First off, folks, I'm going to break down the meaningful news of the day, and I'm going to see what these markets have given us chart-wise, along with sharing trades, as always, with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, you are going to see, well, here's the great thing. Take a look at these charts in front of you. We'll break them down. It looks like a normal day. Let's just jump straight to how we finished. Take a look at the Dow, 1.85%, over 700 points. We've seen a pretty good surge into basically everything but what's been leading for the last year over the last few days. The S&P up over 0.5%, and the Q's actually posting a 0.2% gain as well. Take a look at the Russell, 3.41%. Oil dropped pretty big, about 1.31%, but gold, 1.82%. And that's kind of what's been going on over here on the daily news. The market surge has continued, and I want to say on many fronts, and that includes small caps, mid caps, pretty much everything but technology and communications. I got a fun chart I'll show you here in a second. But retail sales came in a little bit stronger than expected. We're expecting a negative number on that. The consumer is still active, which is a good sign. And the Fed actually sees inflation doing what it's supposed to do. So everything is working out pretty good here. The recent surge could be from a lot of things. It could be some of the political events that we've seen over the last weekend. Nonetheless, take a look at the advanced decline line above below the 50-day moving average. Whatever the cause is, it doesn't matter. When you're a trader, it's kind of what happens. Whatever the cause, it's the effect that we trade. We don't care about the cause, which is very difficult because we all have our own biases, worries, fears, and greed. So advancing, look at that, 80% stocks advancing, 16% declining. And that actually shows you the impact of some of those larger tech companies and communications companies can have, because we don't really need that much participation to get these markets higher. But yes, 80% advancing, euphoric purchasing across all avenues. It's I can't really emphasize that enough. Above below the 50-day moving average absolutely catapulted us. We've been watching this at 50-50 for quite a while. And some of the stocks that were still below their moving averages were moving higher. They just weren't doing what the leaders were doing. A couple of days of inflection has pulled everything up. And so we're at this 76.24 level. So let's just jump straight into the charts. Now, this is a gorgeous chart. This is an ascending triangle pattern on the S&P. Now, outside of what, some of the other things that we've seen and what the Dow's done and what the small caps have done, this is an absolute solid chart. Look at the volume here. It's beautiful. Ascending triangle. We're still +3 on this. Let's also take a look at the Qs here because it's still got a pretty good bullish pattern. Not as clean cut as what we saw in the SPY, but it's got a substantial little bit of a pullback. But look at this. Didn't even really get to its 20-day, kind of trying to stabilize itself and move sideways. And one thing I really want to point out with this, folks, is it's not super strong, but it's not falling apart. This can consolidate. So for you traders that have those technology and communications positions that are still bullish, please don't dump them. This is a gorgeous chart. It's showing strength. It's just going a little bit sideways right now. And it's really hard to focus on the charts when you get euphoria into the markets. So yes, this is a surge of money. It's been coming in for a couple of days now, and it's creating all sorts of misdirection. But we still need to focus on our overall plans and charts. So let's take a look at the heat map here. And you can see none of the big ones really participated today, but the markets closed positive overall. And when you take a look at the charts, these ones that are red, they're not breaking down or falling apart, or they hit their top and it's the end. They're just taking a break. So I really want to emphasize this is a bull market. This is a bull surge. It's pretty euphoric, and I'm going to be honest, folks, it's pretty difficult for me to trade, but it's happening, and it's all to the positive side. So I really did want to kind of show you this graph today. This is the one-day performance, and you can see, I haven't seen this in a long time, but you can see what's at the absolute bottom was technology and communications, which over the last, I could say over a year, these things have been in the mid to the high But look what led: industrials, basic materials. I mean, energy actually got ahead of technology and communication services. So it's not like these are being sold off. I don't want you guys to think that these two on the bottom here are being sold off. It's just that everything else is getting a surge. Lots of purchasing off the bottom. Could be speculative trading, reactionary trading. It doesn't matter. But we still have to chart these because there's a lot of charts out there that have experienced some euphoric moves to the upside that are still not very good pattern-wise. So we got to be super patient. We got to put our biases aside, and we got to be calm. Here's another thing that will draw a little bit euphoria. This is the diamonds, and I wanted to show this chart because this creates the FOMO, fear of missing out. I'm getting a lot of emails, a lot of coaching sessions that I've been working at as of late, talking about this. Geez, Joe, I'm missing out. It's taken off. I could have bought it here. Now, this is a great pattern in the long term, but if you take in consideration this volume that happened with this candlestick today, yeah, it'd have been super cool if we just accidentally bought that 3 or 4 days ago, but it wasn't confirming in a sustainable pattern. And this is euphoric surge to the upside, which means what does go up will come down. Now, it won't come down tomorrow, so please don't go short this thing. But it's really difficult to do any sort of a balance here. I mean, if you were to buy this tomorrow, you've got the same chance as if you were to try to short this tomorrow. It's a 50-50 guess here. Volatility is just a little high. So let's just let this euphoria play itself out. Another chart to take a look at here would be the Russells. This was a pretty interesting chart as well. Just a massive surge. It looks almost like a program purchase across all the board, or maybe a short cover rally. I don't know what it is. But this did have a pretty decent symmetrical triangle pattern going into this. But once again, way out performance on volume, way outside of the range that we've seen over months, if not even a year or so. And it just goes up and up and up. You just kind of have to let it play itself out. So overall, folks, I mean, we are still +3. We've been +3 for a long time. I really do actually love the ascending triangle pattern here on the SPY. A lot of the SPY does carry some strength in the financial sector. JP Morgan's one I've been watching for a while, Goldman Sachs. Some of those larger banks have done pretty well. They've had good tradable patterns, and they continue to do so. So there's some trades out there. We don't have to go chase these high flyers. But this SPY is a beautiful chart, still showing strength, looking really good. As far as potential trades, folks, it gets difficult. And the reason being is all of the bears that I had that I've been watching and looking at, they have absolutely just flipped around. Some have, some haven't, and it's kind of a euphoric bounce. It's very difficult to just abandon any sort of bear trades that I have on because there's just no reason to. They haven't really failed, but it is a pretty discerning bounce, and it does kind of shake. You're a little bit worried about, oh geez, why did I get into this? But that's what happens when you get euphoric surge into the markets. So keep that in mind. I didn't see any that I liked, and the reason being is because the majority that were out there did have some sort of reaction over the last couple of days. But I like gold, Coca-Cola, and JP Morgan. Check this out. There's some pretty solid Dow components, ones that have been around for a while. I figured that I would share Coca-Cola. It's one we really haven't talked about. JP Morgan's pretty good, and gold, as you guys have been following along for a little bit, has been super strong. So there is opportunity there without chasing, right? So here's Coca-Cola. It's just a solid ascending triangle pattern. It's a Dow component, and so it's participating. But what I like is this has been pretty solid, setting these higher lows for a little bit, right before the euphoria hit the markets. Now, obviously, the volume's not nearly as high as some of those charts that I showed you earlier, but this could kind of creep in, right? A rising tide raises all boats. So I thought it would be a great trade. Now, personally, folks, I'll just be straight up. I'm not going to be trading for the rest of the month. I'm going on vacation, and I couldn't be happier stepping away from these markets at this time. It's very difficult for me to make decisions when volatility is as high as it is. So volatility is high with this recent surge. I imagine it continues. It's pretty specific. I mean, I shouldn't say it's specific. It's specifically not in tech and telecommunications or anything that's been leading for a while, but it's pretty much everywhere else. So be aware of overextension, follow your chart patterns. If you do have some of those bears that we've looked at over the last few weeks that have had some pretty substantial bounces, don't abandon them until it hits a level that maybe your trading plan will tell you to do so, because this could easily just stop and we can roll back over. It's just be aware that volatility creates all sorts of motion or bias. So just make sure that you're not making any decisions based on those. Trust your charting and follow your plan. This might not be the best week or month. It might be the greatest, but understand it's not going to be any better if you react and use emotion. Economic reports, not a lot. Jobless claims, Philly Fed manufacturing, and leading indicators are left for the rest of the week. The Fed seems to be very comfortable with where we're at when it comes to inflation, and we did get a retail sale that did show that consumers are still buying. So we've got all sorts of good things. Consumers still active, employment is still decent. So regardless of what caused this surge in the markets, I try to set everything aside. We've got a little bit of euphoria coming into the markets, and we definitely have a whole lot of money coming into there, but we can still play things once things calm down. Earnings reports, Johnson & Johnson, you can read them. Netflix is out there, Abbott Labs, you got American Express, Schlumberger, Halliburton. So they're still popping up. So there is earnings out there regardless of the euphoria that's in these markets now. Just be mindful of it. All right, folks, best to sit back, let this play itself out, follow your plan. Thanks for joining me, and we'll talk to you next time. Bye, everybody.